to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis. With me, as always, the main man of the hour, AJ. Good morning, AJ.
Good morning. How are you, Sip?
I'm doing wonderful. Happy first day of Q3. Happy July 1st. Happy Friday going into the 4th of July. What are your thoughts on where we are? What should we expect? I know we were talking about it before the show. Things are slowing down. Give me some insight.
Well, it looks like things are moderating, but man, the conflict out in Europe, it's really still playing through with our food and gas prices. And so the Fed went ahead or not the Fed, but we got our personal consumption expenditures economic news this past Thursday. So yesterday. And man, it does look like our core personal consumption expenditures index has moderated a bit. And that's kind of cool. But the overall personal consumption expenditures index, which includes food and energy, gas, it's not moderating at all. The gas prices are up, food prices are way up. And so it looks like we've still got some work to do, but I'm not sure. Like the Fed's tightening strategy seems to be working on our core pieces, right? So I'm a little bit confused, as is a lot of people, but I do know that we just started our summer doldrums. Traditionally, summer doldrums is in it's July and August. And so I think that it's going to be kind of quiet for the next 2 months as families start going on summer vacations and things like that. I think we're going to constantly be hearing about the price of fuel until it starts coming down or moderating, and at least down below $4 or at least down below $5. Yeah, I'm as confused as anybody, but whenever I'm confused about headlines and things like that, I wind up just defaulting back to what the charts tell me.
And I just
Here we
pulled
are.
I just pulled up the chart, and one of the headlines that I was seeing this morning that caught my attention was because we're going into Q3, right? The stat that they keep throwing out is that it was the second worst start to the half year since 1970, and I guess that's kind of what we're seeing on the chart, this downward pattern. And the question that everyone is asking is, well, what's the second half look like? Could we rebound? Could we find a bottom? And so, I don't know. Can we get some answers from the charts?
Well, here's what the chart. So last week, there's been a lot happening in the charts. Last week, when you and I talked, we had just confirmed that the June 16th bottom was legit. We had just confirmed that that was the bottom and we were on our way up. And we talked last week, we confirmed that June 20th was the next top. Now, correctly, let me zoom in a little bit here. If you remember correctly, I like to throw on a ruler. I like to measure these reversal moves compared to what we had seen the prior time. So for instance, you can see on this scale over here on the left that we go from 0 to 100%. And so what I like to do is I like to measure how far the next move retraces. What percentage of the previous move does it get to? And I forecasted that we would get to this center zone. We would aim for 50%. And I give myself always a little tiny bit of fluff. Be moving, let me just get out. to move a little bit above or below. And it looks like we had top right almost just shy of that 50% mark. So, I've been calling these targets for the last months, and the market has been responding perfectly to I said it would go. We got that confirmation just yesterday that was where it's going to stop, and now it's heading back down again. So if everything is playing through with our analysis, then we expect it to go south of this number right here, which is 3,546. I would round that and say $3,550. We expect the next price move to go south of 3,550 on the S&P 500. Now
And so,
that's if we are continuing on a downtrend. And I don't want to jump in on that and say that that's where it's going to go. I'm just saying that if it goes below 3,550, I'm going to continue trading the downtrend.
sure. And I would assume that another case scenario is if we're heading into this doldrum, right, of not a lot of movement, maybe we stay in that range, right? It could very well like
Absolutely.
kind of just bounce back and forth there for the next 2 months until some major event can either push it down or kind of help us find a bottom. And so the great thing about some of your strategies and the things you're doing at Trading Trainer is that you have positions and trades to take advantage of that, which we'll go over. But if you want to talk about the range there, right? Like that's a safe assumption that if nothing really happens, we'll kind of just bounce around there.
Yeah, exactly. So if we basically right now, if we we're kind of stalling in this center zone again as we pull back into this 50% area. If we wind up confirming a reversal in this 50% area, that's when my light bulb would go off and I would start to believe that maybe there's the underpinnings of an uptrend. However, if this guy continues down below this 51 area into this area right here, anywhere from about 3,760 down to that 3,600 and let's say 3,610. Anything in that area makes me think that we're stalling. We're sideways channeling. It doesn't make me think that there's going to be a trend reversal or anything like that. It means that things are just kind of stalling. And then, like, I think I called out a number earlier, but I'm changing my mind on that number because I had to reset my scale here. My new idea is 3,610. If I go below 3,610, I'm still full on into the downtrend. So let me just throw those numbers out there one more time. If I stay above 3,760, I'm starting to think that there's an uptrend brewing. If I'm somewhere between 3,760 and 3,610 in that range that you were talking about, I'm thinking that things are stalling. And if I dip down below 3,610, I'm doing what I'm doing right now, which is preparing for more downtrend.
Yeah, and it would seem if we did break that 3,600, that on an annual basis, it's not looking good for us. And one of the rationales that I saw an interesting stat this morning that maybe I could just pull up real quick, but it was the historically when we start off, with a bad first 2 quarters, these are kind of what the rest of the years look like. And I mean, that's pretty promising to say that there's hope. There's hope to find a bottom, but you never know, right? So,
And I want to, when you said that it's maybe not too good for us, I mean, speak for yourself. When I'm trading my options, I mean, I can turn any of these patterns. In fact, these patterns of downtrending are some option traders' favorite patterns because we have this phenomena in markets where we say the bull climbs up the stairs and the bear jumps out the window. Well, that actually works really well for options traders because option traders can take advantage of whether the market's going up or down or even sideways. So if the bear is jumping out the window, it gives option traders, so long as you know how to put yourself on the correct side of the equation, it gives us an opportunity to really make a lot of money quickly in a short amount of time because we can catch those bears jumping out the window with our trading strategies.
Sure. And with that, let's go ahead and invite everybody to the daily workshop. So AJ has a daily workshop where he breaks down a lot of these strategies. So I'm going to go ahead and get us into. I'm going to share the link there. We'll play our little promo video so that you can get all jazzed and excited about it. And then
Mhm.
when we come back, we'll go over a couple of trade ideas, positions that AJ and the crew have been looking at over the past couple of weeks. And if anyone watching, listening has an idea of their own, feel free to drop it in the chat and we'll see if we have time to bring it up. But the link is in the chat. Go ahead and check out the workshop if you haven't done so already.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. Wonderful.
Sip, before we move on to tickers, this is a common theme that we've been pointing out. You know how we've been talking about Fed and how they have all these bonds on their books,
We've
bonds that
covered
they
that
bought,
multiple times on the show. Yeah.
bonds that
And
they've bought with imaginary money. This is an interesting thing that we're really identifying here with the Fed, right? The idea in theory is to control demand on things. Number one, you're going to make money more expensive to borrow. That's the whole interest rate thing. They're going to raise the price of money. But also, they're going to start selling back these bonds that they purchased in order to increase the interest rate that bonds are giving and get people to invest more in bonds. But the Fed can control inflation by actually taking actions, but also this rumor mill, right? This rumor mill by leaking information and getting people to react to those leaks versus actually taking action. I mean, when you look at the Fed balance sheet and they give out their reports every Thursday afternoon. So they're not selling bonds, they're buying bonds, right? They're actually, moderating the inflation, but they're almost worried about deflation or recession. I don't know. What they're saying out of their mouth is not commensurate with what they're doing. They're doing the opposite. They're actually buying bonds instead of selling bonds. To the tune of, they have actually, in the last 3 weeks, they've bought maybe something like $40 billion worth of bonds back. And so I almost believe that, when they're like, oh, this leaked information has come out. And I almost think that they're actually leaking the information to try to get people to curb their purchasing and without actually taking the actions to support it. So, what I want to leave with our listeners is that there's a couple of different ways to control inflation that the Fed is employing. And one of them is just releasing rumors to get people to stop buying stuff.
yeah, and in comparison, if you want to just scale out of that chart real quick, right? Like if we look at the long term, it's like, oh man, we've got a long ways to go there.
Yeah. I mean, what they have said that they'd like to do is drop their bond purchases down to this level that was before the COVID. So around $4 trillion. Right now, it's up at around $9 trillion, as you can see here. So they've been saying they want to sell back $4.5 trillion, but what I saw them do in the last 3 weeks is buy $40 billion. So they're not selling anything back, even though they say they're going to. And it's just interesting because they're saying one thing and doing the opposite.
Yeah, maybe propping that market up just a little bit, tad bit longer there. All
Yeah.
right, cool. So diving into the tickers, right? One of the big names that's been all over the news this week is this battle for Spirit Airlines, Frontier and JetBlue, and it's all over the news. So then we've got one of our favorite tickers is kind of sitting there, Delta
Hmm.
Airlines, one that we've covered a lot. And so I guess we have an update. We have an opportunity. It might be getting so boring that there's some money to be made off of it. What are you seeing, AJ?
Well, so we love Delta Airlines because it is actually quite boring. And I think that Spirit was a spin-off from Delta, if I remember correctly. And Spirit, of course, is in the news because uh, it makes perfect sense for them to be merged or acquired by Frontier, but then JetBlue wants to play on this, and so there's all this stuff. But coming back to Delta Airlines, this is a neat play that we've been, and it depends on how you've been trading premium against it. One of the things that comes up often is what happens if the position, breaks out of its channel. If you've been trading uh, based on the ideas that this is its channel, and all of a sudden it dips out, it all depends on where you are in the premium selling cycle, right? If this is dipping out and you're in a position where you started off long, meaning you bought some Delta stock or you bought some Delta calls, then more than likely you've gone ahead and gotten rid of that main position and you're allowing your protective put to profit. But a lot of our folks have actually been in the opposite premium selling, meaning they actually shorted Delta or they bought some puts in order to trade Delta, and then they've been selling premium on it. And what has happened for you guys is, of course, if you didn't get exercised, you're now in this shorted position. And again, you've made money. So, what's nice about these premium selling positions is that they're easily adjusted into a trending market. Whether it's a lot easier if your initial position, like for instance, if you had shorted Delta, it's a lot easier to adjust that position if you trade outside of the channel in the direction of that downtrend. It's a lot easier to do that, but it's not impossible to switch it over to the protective option and to liquidate the main position. So I know that's a lot of like word salad that I just spit out there, but the main takeaway is when the market goes sideways or when your particular ticker goes sideways, you can sell premium against it. But then when it starts trending again in either direction, you can adjust or modify the position very easily to then take advantage of the trends. So it's not necessarily black and white, stop the premium selling, start the trend following trading strategies. They modify quite easily.
Yeah, that hybrid strategy that you've discussed many times. So, looking at the chart, does this mean that we may be creating a new support level there?
Yeah, if you're allowing if you've been short the Delta Airlines stock, this is a time for us to put on a new trading zone. So it looks like we're establishing a level of support around $29. So setting up a threshold down here at $29 and then perhaps protecting yourself. And sometimes it's a little confusing as to what level I want to protect myself up to, but we can draw in some previous lines of support and say, well, maybe we'll protect ourselves up to 37. So now our new trade zone is 29 to 37. And you could just start selling premium right there all over again. And so, yeah, you just let the position tell you, dictate to you. That's another thing that folks need to realize about investing. unless you are a market mover, which means you have so much money or capital that you're investing in the markets that you can actually move the underlying symbols. And I'll tell you, unless you've got into the hundred of millions or even billions of dollars, that ain't you. So unless that's you, which I believe that none of our listeners are, but maybe, unless that's you, you have to take the approach of reactionary investing. So as much as you might plan things out, and I'm all about planning things out, the truth is you have to play the symbol as it moves, right? And have a plan of, if this happens, this is what I'm going to do. Else, if this happens, this is what I'm going to do. And you stick to that plan, but don't get sold on one outcome. Definitely allow the pattern to tell you what to do.
Awesome. Great advice. Moving on to our next ticker. This is one that I'm assuming is starting to become weighed down by some of these supply issues, maybe energy costs, but one that we've covered a few times, and an establishment that I haven't visited in quite some time, since I've been working on my diet, and that is Wendy's.
Okay, Wendy's is one that earlier we had really been profiting on. And let's zoom out about a year here. Wendy's had been a sideways moving pattern for quite some time. And just like we were just talking about with Delta Airlines, Wendy's decided to break out of its pattern, start becoming a trend follower about the middle of March. Middle to end of March, it started to say to us, hey, I'm going to start trend following. Now, again, depending on how far you were into your premium selling position, either that premium position turned into a cash position, or we modified and adjusted it in order to take advantage of the downtrend. Now it looks like it has bottomed around $16, and we're trying to determine what is happening with Wendy's now. With premium selling, it doesn't hurt when our underlying symbol decides to do a pattern change. It doesn't hurt to give it a moment and allow it to establish new support and resistance in lines. And when that happens, we always want to make sure that there's two tests minimum of resistance and two tests minimum of support. So it looks like we may have found resistance around $19. But this support level, I mean, this was not nearly a test because this looks like it's ascending. So right now, in my opinion on Wendy's, maybe we let Wendy's mature into a new pattern. Who knows? Maybe if support is ascending and resistance is horizontal, we're going to find ourselves in a consolidation pattern and we can trade this as a breakout. But that hasn't materialized. And so I don't want to force any sort of trade on a symbol until it has a mature, clear pattern that we can identify.
Yeah, and I'm starting to sense that a lot of these names are seeing very similar setups, right? Where we've had this sell off and we've got this rebound, and now it's trying to create these new zones. And you're right. I guess the next month, 2 months, 8 weeks or so, we should be able to refine some of these, these new levels.
Absolutely. Absolutely. And, the trick with investing in the markets and identifying patterns is don't force a pattern. You're here to identify the pattern, not to define it. It's going to define itself. Again, unless you're a market mover, you can't define anything. You have to be in the world of investigating and identifying patterns. Then you can trade appropriately with whatever tools you have. With options, you can trade it any way you want.
Yeah, and Wendy's is once again in that sweet pricing spot, right?
Yeah.
Just in and about $20, very liquid.
Yeah.
So we'll definitely keep an eye on that. All right,
Keep an
moving
eye
on.
on Wendy's.
Yeah, moving on to another name that we've discussed a handful of times, and that is in the retail sector, TJ Maxx, which I think it's getting hit today, the entire retail sector. What do you got on TJ Maxx?
Okay, so TJX Companies, that is the umbrella company that owns TJ Maxx, Marshalls, Home Goods, things like that. Um, yeah, and it's funny with TJX Companies because their model is basically an overstock model. If you've ever shopped at a TJX or a Marshalls, you know that you may not find the same good deal a couple weeks from now because they buy basically overstock of other excuse me, other stores and then put it into their outlet so that people can buy nice stuff that just didn't sell elsewhere at discount prices. Okay. So when other type of stores like Macy's or a J.C. Penney or even some of the electronic retailers, the e-retailers, when those stores don't do as well, a lot of times TJX is the counter indicator. It tends to do okay as well, but retail as a sector seems to be kind of falling off a little bit. And we see that TJX is right there with it. But TJX established a level of support around $55, and that's what it's testing right now. And so, um, what we're looking at is to level holds. If that level holds, and one of the ways I like that is just use a lagging indicator like the MACD, and I wait for a confirmation as to whether this is bottom being found. So we're maybe a couple days away from identifying whether TJX is going to hold at 55 or crash on through. But if it holds, I wouldn't be surprised if TJX doesn't fall into the model of the summer doldrums and continues to trade sideways in this like $55 to $65 range. And we can't sell a couple of months, if not more, of premium against it.
Yeah,
It's
and
a wait and
so
see.
yeah, I feel like that's going to be the common theme here the next couple of weeks is we're down on the markets as a whole. Are we finding a bottom? Are we going to see a little bit of a rally? My question to that is, if we do start to see a little bit of a rally, is that when you're going to be looking to take a short type of trade, either buying puts, shorting the stock, right?
So that's a great question. So I'm not buying into that the market's going to start rallying, and I'll continue to trade those short positions until then. But if the market starts to rally, um, I'm going to watch that rally. I'm going to watch that move up. And depending on how far it rallies, and again, one of the strategies I like to do, Sip, is I like to measure it compared to the last time it went down. So if it went down this amount of dollars, I'm going to just $100. I want to pay attention to how far it rallies. If it rallies $50, then I'm totally still only believing that it's time to short this thing. In other words, if it rallies $50 and then starts heading down again, that's a swing trade. That's the classical swing trade. And so I want to buy puts or short that symbol and take advantage of that move down. If what happens during the summer doldrums does happen and it goes maybe above 60% of that move or above $60, but stays between the 60 and about the 120 range, then this means that, hey, we're going to be in some sideways stall patterns, right? If it goes to the $60 to $120 range. If it instead shoots all the way above $120, that's when I might think that it's time to start imagining an uptrend, a bottom having been found in the market. So it's all about just watching how far these things retrace. If it, again, stops in the $50 to $60 range, swing trade down. Let's buy some puts. Let's go ahead and short some symbols, and we'll continue to trade the downtrend as we have for the first half of the year. If it goes up to the 60 to 120% range, then it's all about selling premium. It's all about making money during the summer times when the rest of the people are indecisive. And if it goes above the 120 range, then it's time to start entertaining the idea of a reversal and that maybe we're starting to see some rally. Not sure if we're going to see some rally though. We'll see.
Yeah. And that's one of the things that I think that a lot of new traders are weary about is we have a lot of these signs that the market's going to go down, that things are going bad. And instead of being proactive and learning about the strategies and tactics that you can implement to take advantage of it, most people are just buy and hold investors. And so, do you have any insights or tips for somebody that is a traditional buy and hold investor on how they can change their perception to take advantage of these downturns?
I mean, when you're a buy and hold investor, you're believing that the market's going to go higher. Well, the market's correcting right now. It's not going higher. And so you just have to rationalize with yourself and understand that, you know, this rally that has happened over the last 10 years, right? Actually, more like 12 years since the last recession. Look at the evidence. There's been a lot of pumping up of the economy over the last 12 years. People like to feel good. And so there's been a lot of pumping up, but they've basically been kicking the can down the road. What does that mean for you? That means that it doesn't necessarily mean you have to give up on your whole portfolio. But what it does mean is you have to kind of learn some strategies to take advantage of these downturns. Okay. There are investing strategies out there. You can stick with stocks. It's even easier to do with other things like futures and options. But you want to open up your mind to be able to profit no matter what the market's doing. If you stick with one thing, I think it was, well, they attribute it to Einstein, I believe. No, it wasn't Einstein. But anyway, the quote that keeps going around is insanity is doing the same thing over and over and expecting different results, right? And so when the market's going down, the last thing you want to be doing is, buying things unless you've identified a bottom. And that's just I don't have any other advice, Sip.
Yeah, my advice on top of that would be is if you're an investor and you haven't learned to trade options or at least to see what is available, then you should click on the link that we have in our chat and go watch AJ's workshop, because it's crazy to think that you can hold these stocks and they can continue to go down. But there's this wonderful tool called an options contract that allows you to collect some income while that is happening. And that's the beautiful part of premium selling. And I just am honored to have continued to learn so much about it because it's a very simple strategy that most people should know.
Yeah, I mean, a lot of people view options as this like magical thing that is too complicated to learn. Just understand this. Big investors created options about 40 to 50 years ago. Call options came first, and then about 8 or 9, 10 years later after that, put options came. They were created in order to hedge against risk. Now, right this minute is when you should be using options to offset any sort of losses that you might have in your portfolio. But be realistic, right? That's what it comes down to. Be realistic about what these things can do.
Yeah, and they can help you make money when the market goes down, which is one of the greatest reasons to consider using them in the next coming weeks,
Mhm.
years, who knows.
Mm.
All right, let me do something real quick here. I'm going to change our background in celebration of America. Yay!
Yay, 4th of July, Independence Day.
That's right. That's right. So the market will be closed on Monday, and AJ and I will be hitting the grills. At least I
Mhm.
will be. I don't know if you
Yeah.
plan on grilling this weekend.
Yeah.
Um, but With that, AJ, any final words? Any wisdom to provide our viewers going into this holiday weekend?
Well, I want to give people an insight into a ticker that our users and I found yesterday. This was actually identified screeners. So if you're part of my community, my program, we have these screeners that identify different candidates that we might be interested in. And this came up yesterday. I'm not going to go through all the planning because that's what we do in our program. We actually plan out our trade. But I wanted to lay out because I know this is a good time when we have these long weekends to take a few extra moments and brush up on some solid philosophies for moving forward. Part of the planning process of determining what you're going to be doing is not only identifying, what to do when I see A, B, or C, but also what what is going to be giving you the signals, right? If you're planning anything out, part of it also includes how will I know this is happening? And so I can't emphasize enough because some people say, "Oh man, you say to do back testing. I don't know if I believe in back testing." I'm not asking you to back test to test whether or not the strategy will work. What I do with my back testing, because patterns do have a tendency to repeat themselves, is I test whether or not my signal source is going to be a valid signal source moving forward. So, for instance, if I'm relying on a certain combination of indicators, I want to see that that certain combination of indicators had worked for me in the past. And so last night, when we were doing this as a program, on Thursday evening SIP, I get on the line with all the other program participants. We pick a symbol. Last night, we picked Capri Holdings. In case people don't know, Capri Holdings is a company that is the umbrella company for things like Versace, and they're big in the fashion world. We identified Capri Holdings as a possible great candidate for us to plan some premium selling on. We went through the planning process, and then after going through the planning process, we decided to do a little bit of back testing to identify whether this combination of indicators, and I was using this MACD along with a MACD end of day indicator to see if that actually works. MACD end of day indicator with follow through the next trading day. And the key is you want to know your plan and you want to test your plan based on what happened in the past. And then we actually left ourselves last night going ahead, and we liked what we saw in our back testing. And we decided that we're going to paper trade it with all of our assumptions in place to see how that plays out for at least the next few weeks. And that way we'll know if all of those assumptions played out. If it did, then we're going to throw our real money in. So I'm all for folks not only doing their planning, but then testing your planning, both by looking at back data and looking at what happens in real time in the next few weeks to come on, because that's really how you make sure your trading strategies are going to work. You not only create the rules, but then you test the rules. And that's what I say for people over this holiday weekend. Take a few minutes and plan out something and then test it both backwards and forwards.
Yeah, and that's the power of a lot of these tools, these trading tools these days, is you have that ability to practice, 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 practice. Unlike other investment vehicles, such as real estate, owning a business,
Yeah,
things
you
like
have to
that.
go jump in with both feet.
Right. All right. So AJ's gonna be, analyzing all weekend. This guy never takes a break.
I don't.
All right, wonderful. Great holiday episode. Appreciate everybody tuning in. Once again, if you've enjoyed the broadcast, feel free to hit that like, hit that follow, hit that subscribe button. We do our best to provide quality content every week. If you have any questions on specific tickers, feel free to drop them in the chat, leave a message, send us a DM. We'll add it to the list, see if there's some opportunity there. And if you're interested in learning more about Trading Trainer and AJ strategies, jump in that workshop. You'll also get some instructions.
Whoa.
Bless you, sir. Bless you. You also get some instructions on how you can join AJ's weekly mastermind call where the group goes over different strategies there. Woo. All right.
I muted myself that time.
So AJ has basically sneezed himself out of the broadcast, but that's all right because we're going to be ending things here. AJ, you hanging around the neighborhood this weekend? No travel plans?
No, Liza and I are heading to our beach house. So if anybody's in South Carolina, maybe I'll see you on the sands.
Yeah, it's beautiful here in California as well. So I definitely will be outside enjoying myself. And maybe I'll look at some charts. We'll see.
Yeah, in the evenings, man.
Yeah, in the evenings. Put on a little Netflix, go over some analysis, plan the week, because there's nothing wrong with planning.
That's right.
All right, AJ. Thank you very much, sir. Hope you have a good weekend. Everybody, thank you for tuning in. We'll catch you next week.
Bye, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.